Hey everyone, welcome to today's crypto update. So this week I want to go over what's going on with Bitcoin and the overall Ethereum ecosystem in the wake of this whole FTX debacle. So for this video, I'm going to be sharing my screen because there's a lot of charts and things I want to get into. The first of which here is the amount of Bitcoin that's currently being held for a profit, and this is the 7-day moving average. So this is how I measure capitulations. When this goes below 50%, it's usually during a time of Bitcoin capitulation because most of the coins are underwater and most of them are held by longer term holders. And by that I mean people that are holding for a year or longer. In this case, the price is below where it was in 2017, late 2017, and also where it was ever since late 2020. So there's a lot of holders that bought during those two periods of time that are underwater. So the 7-day moving average moved below 50% here on November 13th, and it is still sitting there around 48%. And if we look at prior bear markets, if we zoom out here, we can see that it also dipped below 50% in September 2014. It was kind of up and down for about a year, and then finally made its way out for a while here in October 2015. So it took about a year for that bad bear market to end, and it was still in a bear market for some time, and then finally got out in I guess the second half of 2016. The capitulation of 2018 was a lot faster in terms of holders being underwater. So it went down below 50% in November of 2018, sat there for about 3 months, and then came back up in February 2019. And then obviously during the COVID crash, it was down below 50% for just a few days because that was a quick, capitulation event with a V recovery. That was a very different kind of thing that we're going through now, I think. I'm not sure that it's going to take 3 months. It might, for all we know, but the amount of holders now that are long term that are less likely to sell, in my opinion, is smaller. Usually, you get most of that selling pressure from either liquidations that are people that have to sell, or hedge funds that have to sell, or even exchanges at this point, rather than long-term individual Bitcoin holders. So that's another thing to consider for this bear market. If we get into the exchange factor here, Bitcoin and Ethereum and just cryptos in general have been coming off exchanges in droves over the past couple weeks. So this is the overall net flow for exchanges over the past 30 days. So over the past 30 days now, just for Bitcoin, 165,107.7 Bitcoins have been taken off of exchanges, more than have been put on. So this is a net number. So the outflows have far exceeded the inflows at this point, and that actually accounts for about 0.86% of the entire Bitcoin supply. So people are really giving these exchanges a kind of a de facto bank run here, just because of the fear that's going on within the crypto space. With nobody thought FTX was going to be insolvent like they were, and so people are now very hesitant to keep their coins on exchanges. So we're not sure at this point, what the extent of this contagion will be, but you can see that the market is very nervous right now, and as a result, they're taking coins off their exchanges. And so you can also see here, this is just within the past 24 hours. This is as of Monday. So this is kind of Sunday afternoon into Monday afternoon. The token flow via exchange for Bitcoin was a net flow of about negative $1.3 million or billion dollars for Coinbase, or $280 million for Binance, 159 million for Crypto.com, almost 117 million for OKX, and over 82 million for KuCoin. And again, that's net. That's the inflows minus the outflows. So, billions of dollars being taken off exchanges within this 24-hour period. And with Ethereum, we can see that things really haven't slowed down. So people are continuing to stake their Ethereum. This chart shows really since the beginning of 2022, and this blue line is the number of Ethereum that are being staked. So if we take this line out here, we can see that during kind of the turbulence of May and June into July, this line kind of went flat, and there were not that many new deposits into the staking contract for Ethereum. But here, over the past few days, it really hasn't given up. There's been a bunch of new Ethereum deposited into the staking contract. So if we look at the new value staked, we can see that it's actually been pretty steady. We had the most about 50,640 Ethereum were staked on November 11th, which was the most since late September, so almost a 2-month high, just in the midst of this situation with FTX and everything, which is kind of surprising, and I think that's a positive thing that people are still willing to lock up their Ethereum, and they have faith in the network, and that they're going to be able to withdraw that Ethereum with their added interest on top, at some point in the future. And people still can't withdraw. I think that's expected to be added as a feature in the next 6 to 9 months or so. There's still no timetable on that, but that's what I'm seeing right now. So even though there's a lot of kind of stress in the market around all these liquidations and possible contagion, and although you still can't withdraw your staked Ethereum, people are still staking it, which I think is a very positive thing. Next, I want to show the overall volume for DeFi. So we're seeing kind of CeFi go through a crazy period right now where people are taking their coins off exchanges. But in DeFi, things continue to run very, very smoothly, which is kind of a testament to decentralized finance in general. And every single time the market drops like this, we're seeing DeFi hold up extremely well. It's extremely resilient, and I think that this is going to be a continued thing that people are going to take note of whenever we go through a bad period with crypto. DeFi is just going to continue to hold up very well. So this is the trading volume per day on DYDX, which is the top futures exchange in DeFi. You can see that during the crash here last week, trading volume was $3.5 billion on November 8th and almost $3.4 billion on November 9th. So about $7 billion traded on DYDX seamlessly in just 2 days, which is a pretty big amount. And if we look at a longer term chart here, we can see that that is the most in terms of daily volume since all the way back here in May. So that's one DeFi protocol that's handling this extremely well, and the other one, of course, is Uniswap, which is the biggest overall exchange in DeFi. That also saw the highest daily volume since May. So on November 9th, about $5.6 billion, and then on November 10th, almost another $5.6 billion. So $11.2 billion traded on Uniswap, again, seamlessly. And everything's still running very smoothly with lending exchanges. There weren't that many actual liquidations on these lending exchanges like Aave, Compound, Maker. They've all held up very well, so that is great to see as well. And next, if we look at Ethereum just in general, this shows that Ethereum is now deflationary. Obviously, with the merge, miners are no longer being paid new issuances of Ethereum. It's only going to the stakers. So you can see, as of November 8th, that is the day when this crash started. As of then, Ethereum has actually been deflationary, meaning more Ethereum is being burned with transactions than is being issued to validators. If we simulate the pre-merge conditions, which is the proof of work chain here, we can see that if Ethereum was still proof of work, the overall annual inflation would still be over 3.5%. And now, with the merge in effect, it is negative 0.03%, which is slightly deflationary. And Bitcoin is about 1.716% inflation per year. So, the deflationary aspect of Ethereum isn't going to have an effect on day-to-day price, but with no issuance to miners, it really reduces selling pressure during times of stress, and as a result, it probably does have a factor into the fact that Ethereum has been relatively stable compared to Bitcoin. Ethereum has not made a new low this month, even when Bitcoin did. Bitcoin went back down below that 17.5 mark that it did back in June, and then Ethereum, I believe, bottomed out around $890 in June, but that's still trading at about $1,200. So overall, Ethereum is handling this crash better. Overall, both of these, I believe that you can still make an extremely bullish case for, but just wanted to show the effects on Ethereum of the merge here, because having a deflationary major crypto, I think, is a huge step for the industry overall. And that is really it for this week. So if you have any questions or comments, definitely leave them below. And I go into all of this plus some more in the Substack, so make sure you check that out as well. And thank you everybody for watching. I will see you again on Wednesday for the Stock and Macro update.